Good morning, and thanks for joining us here on Treasure Coast Solutions. Every Wednesday morning from 9 to 10 o'clock, we talk about things that affect you and your lives relative to the national and international and local issues, economic issues. This is not a political show. It's not a financial planning show. Although knowing something about economics and what can affect you going forward can affect your financial planning, and it can also be political. So some solutions that are put out there don't always make good economic sense, but sometimes they make political sense, and so we get them. So we're going to talk about all of those issues, and we've been talking about a number of those issues for a number of weeks here. And frankly, we've been talking about this for a number of years on this show, about some of the things that are going on and some of the issues that are going on. And today, I really have an opportunity. As I've said many times on this show, I play an economist on the radio, so I'm allowed to do that because I pay for the time slot. I'm allowed to play an economist, but I brought in a real economist, a guy who many of you may know, Merle Dimbath. Merle has years and years of experience in the field, both as an economist and as a PhD. And also, interestingly enough, many of you may know he works as a consultant to many law firms and things like that on personal injury cases and other cases relative to economic damages and all of that. And years and years ago, but when I first saw him, he was on TV doing a little economic minute or on one of the newscasts down south, and I forget now because they all changed their call letters, but it was who was that, Merle?
It was Channel 12 in West Palm Beach.
Yeah.
Okay.
So I remember that was really kind of an interesting thing, and I always look forward to that. I was in banking at the time, and so I always look forward to some of your comments. And just so that as a lead in as well, Merle bills himself as the optimistic economist. So it's kind of interesting because most people, after they get done talking to me, are so depressed that they just can't handle it. And so I had to bring somebody in to lift the show, a little optimism on this side. But I will tell you, I think I may have told this joke before on this show, but I'll tell you my economist joke. I know I talked about this, but this is my economist joke. So might be my lead in for Merle as to what the what an economist actually does. There was this family, and they went up to a cabin on a lake, take a little vacation, and the husband was an economist, and he's there with his family, and kind of getting a break from the optimistic or the really the dismal science as economics are known. And so he's up there, and his wife and the kids are in the house, and they're getting stuff ready to go, and all of a sudden they hear these ambulances, and there's all this commotion, and they go outside and to try to find out what's going on. And the economist is dead. He's drowned. And so the police are trying to figure it out, and there was some witnesses, and so the person asked the witness, well, what happened, and they said, well, he just walked into the water. I mean, he just walked into the water. And so the guy said, well, you think was he committing suicide? I mean, and he said to the wife, was he depressed? What was the thing? And she said, no, the last thing he said to me was, on average over time, that lake's only 4 feet deep. And so that's the issues that economists deal with. They deal with the big picture and the on average over time, but they also deal with those little valleys that come in that can throw you a little loop. And it's the valleys that do all the damages, and the mountains, and the damages. So, Merle, why don't you give us just a little bit of background? I've kind of covered on most of it. Give us a little bit of background about your situation and your background.
Well, I guess I should respond with a joke of my own here. I guess the counterpart to the CPA, like yourself, would be that on average, most tax returns don't get audited, right?
That's right. We're not allowed to say that, though. You cannot answer as a CPA. I cannot answer. I'm not supposed to provide advice to clients that take into consideration their chance of being audited. But I will tell you the
Heck,
interesting.
I thought that's why I was here today. I could get some free advice.
You can.
Okay.
I'm always willing to give you free advice. I will tell
Is that
you.
worth what I pay for it? Or?
Yes, yeah, twice what you pay for it. But I did.
That's the deal of the day.
That's a good deal. I did. It's interesting about the not being audited situation and the changing the thing is that years ago we were struggling. The IRS wanted all of the tax returns filed electronically, and CPAs didn't see any benefit to filing electronically. The only reason that a client would file electronically potentially was to get money back quicker, and for most of our clients, they're rolling their payment is to their next quarter estimated, so they're paying estimated payments. But even there, we knew that if they filed electronically, that the IRS would have a lot more information about them, because the little secret that people didn't know is that when you don't file electronically, or in the old days when you didn't file electronically, they don't have a copy of your tax return. What would happen is that tax return would come in and they would just pick up key numbers off the tax return. And then they would audit you based on those key numbers compared to statistics that were out there for that. But they didn't have all of the detail. So when you file electronically, they now can store all of that detail. So what would happen is all of that information is available to them, and now they can fine tune their audit to find, because they were wasting a lot of time auditing clients that they didn't need to audit, and they were missing a lot of clients that they needed to audit. So they were pushing the CPAs to get us to file electronically, and we're saying we're not fools, we're not doing that, and so they couldn't get it done. So they went to H&R Block, is actually where they went. This is public knowledge. They went to H&R Block. And they told H&R Block, here's the thing. If you can get 90% of your customers to file their tax returns electronically, then for the next 3 years, we will waive paid preparer penalties against you. What that means is that as a CPA, if I prepare a tax return and I have the client take a position that is not supported by the regs, I am personally obligated to pay a penalty. I have a penalty that I have to pay, and it's significant.
Yeah.
And I could also lose my license.
Yeah.
So they told them, get these people to file. We won't do that for you. So I don't know if people remember, but H&R Block was running an ad at the time that said, we can get more deductions than your CPA. And that's exactly why they ran that ad, because they weren't going to go to jail.
They were going to push the envelope.
That's right. Yeah, that's right. Okay. So anyway, all right. So I'm sorry. Go ahead. Didn't mean to interrupt.
What was the question?
It was something about your background.
Oh, well, let's see. Parents moved to the Miami area when I was in second grade, so I consider myself a Floridian pretty much. Went to the University of Virginia for undergraduate work, University of Florida for master's and PhD. And have served on faculties of several colleges and universities. Moved to Stuart in 1980, so I've been here a while.
Yeah,
and
I think I met you first time in '86,
something like that. Yeah, and well, it was around that time I joined the Martin County Business Exchange. I was a member there.
Yeah.
In fact, I'm a past president of the Martin County Business Exchange.
That's right. You were in for a long time.
Yeah, a long time ago. And even before I moved to Stuart, I would sometimes come down here for weekends and so forth. And I said, one of these days I'm going to move to Stuart. One of these days I'm going to move to Stuart. So finally in 1980, came down here and have been happy that I did that. I've also enjoyed Key West and maintain a second residence down there. And I go back and forth, as you know.
Yeah, your wife has promised me that house when you're gone.
Yeah,
so,
right. Okay.
I just wanted. I don't know if I was supposed to mention that.
No. Well, I'll have to take that up with her. I didn't know. You're not the only one she's promised that to. So
that's probably true. She'll have a lot of choices. I know her.
Anyway, so we enjoy Florida. We enjoy South Florida. We enjoy Key West, and we enjoy Stuart. And we kind of divide our times between both places.
Cool.
And my consulting practice has taken me all over the state. I've testified in state and federal courts all over the state on personal injury and wrongful death cases and some commercial cases. I'm I'm kind of winding that down and enjoying life more and more and working less and less. And so that's pretty good too. But here we are. And the economy right now, locally and nationally, looks pretty good. And not everybody's working, but more and more people are. And we're coming out of the COVID-19. It's taking longer than I think most of us had anticipated. My wife and I were reminiscing a year ago. We just happened to get ourselves on a selfie video, and we were talking back and forth. And at that time in March of a year ago, we were looking forward to a 2-week shutdown.
Yeah,
I don't know if you can remember that or not,
yeah.
but we were all going to have to hibernate for 2 weeks to get through the COVID-19. Well, 2 weeks have become 52 weeks.
It's going to become 2 years. So, well, one of the things, Merle, I wanted to talk about is, I have a problem with. I do believe that the economy looks good on face in terms of some of the things that are going on, especially relative to the large corporations, the Dow and things like that. I have a little bit of concern about the smaller businesses and some of the problems that some of the small businesses might have, because I see their struggles on a day-to-day basis. But let me ask you this: one of the things that I'm a little concerned about is interest rates and inflation, and in particular, we now have two Keynesians in control, in effect, within, and in fact, you would argue that any of the economic advice probably that the Biden administration is receiving is coming from pretty much Keynesian economists, and in around the world in the years, between Samuelson and Keynes, you're looking at, they were the advisors to most socialistic administrations, because they gave them the theory to provide the money to make things potentially happen, to fund a lot of the Great Society and all of that. In general, we just heard Yellen and Powell. Yellen being Secretary of Treasury and Powell being head of the Fed, chairman of the Fed. We've heard both of them say that interest rates are not a problem, although government interest rates on the 10-year Treasury just doubled in the last 3.5 months. So, I'm not real good at math, but I do know that if you keep doubling a number pretty quickly, that number is pretty high. So, and I also know from my banking days that the Fed really doesn't have any control over long-term interest rates at all. And short-term interest rates, it's somewhat nebulous, the control that they have in terms of how they can, specifically control those rates. It's still kind of nudging the Fed funds rate, which is a short-term rate. But first of all, maybe you can help explain to our audience in terms of, what is the Keynesian theory in general, in terms of what's their process here? Why do they not see a problem with the government borrowing large amounts of money?
The original Keynesian concept, which of course is named for Lord Keynes, who was an economist in the 1930s, and his and I've read his book, The General Theory. It's a very readable book, and there's some interesting humor in that. But at the time that Keynes wrote his treatise in the 1930s, the world was suffering from severe economic depression, and Keynes presented a philosophical as well as a theoretical justification for government deficits to help counteract the decline in spending by the private sector. So it was, a lot of it was what we might call a counter-cyclical type of philosophy. I think it's always difficult or hazardous to be speculating on what a dead person would think today if they could see what was going on. But I can't help but believe that Keynes today would be pretty surprised at what he would see on the landscape in terms of our monetary and fiscal policy, because the context and the times in which he wrote his work, we did not have the combination of both a very massive federal spending on top of a very generous monetary policy.
Well, and then,
but so we've combined those two together, and time will tell what the ultimate result will be. But it's not as though we don't have some historical reference, and I'll cite a couple of them. During World War II, when we were in an all-out war for survival, and every last person who could work did, and not only were incomes greatly increased at that time, but so was government spending as well as government debt. And after the war, we saw quite a bit of inflation erupt as a result of a pent-up purchasing power that had been developed, and pent-up demand for consumer goods. And during the 1950s, late 40s, early 50s, even several years after World War II, we continued to have government price controls on various products because of strong inflationary pressures. It was in the Eisenhower administration that we began to see the relaxation of many of those price controls. Then more recently, during the Lyndon Johnson years of the so-called Great Society, it was his goal to create a great society with no poverty and so forth. And so this was, they were using this to justify a lot of government programs at that time. And this was on top of a war footing. The Vietnam War was raging. And so on top of massive government spending for war effort, the Johnson administration through Congress enacted programs to pursue a domestic agenda, the so-called combination of guns and butter. Well, Johnson wasn't in office to see the results of his handiwork, but his fellow Democrat, Jimmy Carter, I guess he was in from 78 to 82. He had the honor of presiding over a period of time of when we had massive inflation on top of interest rates. There may be some people listening to this program that can remember that period of time in 79, 80, 81, when we had double digit interest rates as well as inflation.
Yeah, mortgage rates and prime was over 20%.
Yes.
And actually, and Reagan coined the phrase stagflation.
Stagflation, right? Yes. Yeah. So it's not as though we haven't had some experience with this combination of massive government spending on top of rather generous monetary policy, which later on came back to bite us. I hate to be a pessimist, but the last chapter of this experiment has yet to be written. And I think we're beginning to see the results of this. And I think over the next 2 or 3 years, we're going to see even more of it. As you mentioned earlier, interest rates have already been climbing up. When you go from a 0.7 interest rate on the 10-year bond to a 0.4, that 1.4 may sound like a small interest rate, but you have increased interest rates.
You doubled your cost.
You've doubled it. Well, when you, as you mentioned, it doesn't take long to keep doubling interest rates before it gets to be a very significant rate of interest. In the words of Everett Dirksen, the senator from Illinois, and I think you're from Illinois.
I was from Pekin, where he was at.
Okay, yeah. He said $1 billion here, $1 billion there. After a while, it gets to be real money. Well, okay. Today, if Everett Dirksen was alive, we would say $1 trillion here, $1 trillion there. After a while, it gets to be real money. And so as far as listeners are concerned, what must we do to be saved? I think it's clear that the current engineer and conductor on the National Economic Railroad train are not going to be changing course anytime soon. So the individual passengers here have to hang on as best they can. And the traditional safety assets of gold. We're seeing, an increase in the interest of gold. I think part of the interest in real estate today is somewhat influenced by the desire to hold hard assets. There are several
in the U.S. In the U.S.
in the U.S. In particular. There are many ways to look at the current real estate phenomenon, and I think it's interesting. The front page of the Wall Street Journal today, and we're talking about Wednesday, March 31st, in case anyone is not sure what issue I'm talking about today, March 31st. Front page is devoted to articles and diagrams about prices of real estate, not only here in Florida, but obviously nationwide. Right. This will not last forever, but it is very much part of current reality. We have seen real estate prices rise and fall in the past. At least I have in my lifetime, and you have in your lifetime. Yep. So,
I remember when I moved to Florida, though. I remember when I moved to Florida in '86. Well, I moved to Florida in '82. It was '82. I remember being told as a banker by fellow bankers, don't worry about loans we make on real estate. You cannot lose money on real estate in Florida. Mm-hmm. That was the comment. That was actually, interestingly enough, right before the condo deficit or depression took place down in Palm Beach County, and the prices fell off the table. They subsequently came back, but still, that you'd hear that. I got a couple things that I wanted to mention. Just one thing, as a lead in. When the world has problems, a lot of times they look to the United States for financial solutions. In other words, when somebody not in the United States is looking for security, something that they can count on getting back, they want hard assets, or they're looking for, they tend to either buy U.S. government debt, the U.S. government debt. But when things get really bad, they tend to buy U.S. real estate, because unlike some socialistic and communist countries, there you cannot own real estate. You only have a right to use it. So in the United States, you can buy that. We have a history of property rights laws that protect your right to own that property, and the government can't take it from you. And that's something to keep an eye on as we go forward, because that is the base of a capitalistic system, is the ability to own assets, and particularly the ability to own real property. So I just wanted to make that as a lead, because Merle was talking about, people buying real estate. Some of this is, yes, people wanting to move from a place that they aren't wanting to be, where they're restricted, like New York, to Florida. To a state that there's less restriction. But it also is why there's some international movement into Florida, because it's also a safe haven for wealth, particularly wealth outside of down in Brazil and Argentina and Venezuela and places like that. One of the things, though, I wanted to mention, and I hadn't realized it, Merle, is that you were mentioning in relative to Keynes, that the world was in a depression in the 30s, and that's an interesting thing, because I think one of the things that may be a saving factor in this situation is that, but may exacerbate it, but we are actually worldwide probably in an economic downturn. Definitely outside the U.S., because the the virus, the COVID situation, has had a significant
Yes.
impact on major producers, France, Germany,
yeah.
yeah, and some of our major partner producers,
even the United Kingdom,
United Kingdom,
yeah.
and largely it's also had an impact on Russia and to a large degree China.
Yes.
So we're looking at depressed economic activity kind of all over the world. Now, one of the things that I think Keynes didn't take in, his theory, I think, was predicated upon the fact that that the government could borrow money and had the ability to borrow kind of an almost unlimited amount of money to support the population, and it would not affect private business because the businesses were largely in a depression, so they weren't needing to raise capital, go get capital, and borrow money. What I see as a problem going forward is that, and particularly in the U.S., that we have businesses that have a need to borrow money right now, and as a result of all of the government intervention on PPP and EIDL loans and things like that, where the government's pumped a lot of money through that way as loans, the banks are not having to be very competitive as it relates to financing, including even making loans to start with. One of the things I've seen happen in the last 6 months is that the banks don't seem to be eager to lend money. They talk about lending money, but particularly the big banks, they're still out there throwing $100,000 at somebody because it's doesn't make any difference to them, and they're too big to fail. So they don't have to worry about loaning money and making mistakes. They're too big to fail. And so, but they aren't out there aggressively providing money to Main Street. They're, they may be providing money to Wall Street, and Wall Street has its own access to money. But I see a conflict coming up here that at some point business is going to need access to capital. And I'm already seeing government choking them off from that through help, supposedly. In other words, the government is subsidizing these loans and providing it. But now what you've got is a situation where you're really using government's guarantee. At some point, government is going to use that guarantee to raise other money for themselves because they got to fund the deficit. And then, private business will be shut out just at the time when that business is starting to expand. And then top that off with worldwide economy as it starts to come back. There's a demand for that. And one of the things as an accountant that as a CPA that I see all the time is that there's a difference between cash and income. And when you have a downturn in the economy, for whatever reason, and this happens to be COVID related, but we still have a downturn in the economy. If that downturn lasts for more than 6 months, 6 to 7 months, private business is going to utilize their internal capital and spend it. So here's what happens, and here's what I'm getting at this, and I'll get your comments on it, Merle, but here's what I'm getting at. If I'm a business out there and I'm doing $2 million a year in business annually. Let's say I'm doing $2,400,000 in business annually. So I'm doing $2 million a month. I mean, $200,000 a month. Mm-hmm. All right. So I'm doing a couple $100,000 a month. Well, that's income to me. I made $200,000 that month, but I haven't collected it yet because maybe I've got 30-day terms or 10-day terms. So
you got accounts receivable.
I've got accounts receivable of maybe a month's sales, yes. $200,000. Now, on the flip side of that, before it became a receivable, I had to go out and spend some money. And I had to buy inventory, and I had to do all this, so I may have spent $150,000 on inventory. So I get 200 in sales, I get 150 in inventory. I made $50,000.
You have an accounts payable to match the accounts
receivable. Yeah, that's really what it boils down to. So what happens?
So you've become a bank.
I become a bank, and that's exactly what's happened. Most small businesses, especially ones that have been in business for a long, long time, have developed that internal capital that they can't take out because there's no cash to take it out.
Right.
But they've developed, but it's because it's in there supporting their business. And as that business is growing, they need more and more of that. If they're older, they already may have that. They're more of a stable business. They have that capital already. But on a business like I'm talking about that has maybe $2.4 million in sales a year, they may have as much as $500,000 or more invested in their company that they can't get out, right? Because they need to fund new inventory. They need to fund new receivables as those continue to go. But when the economy stops and everything goes down, they can extract that because they get paid on the receivables. They're not buying the inventory, and all of that happens. That has happened worldwide. So when the economy takes off, a lot of internal capital has been spent already, and it's going to have to be replaced. Well, it can't be replaced quickly with profits internally because it was capital that was built up over really years. So they're going to have to borrow it. If that money's not there, because, for example, the bank can get 10% on treasury notes, what's going to happen to that funds? Interest rates have got to go up. My interest rate has got to be better than the 10% that the treasury is willing to pay. Because I'm not as good a credit as the treasury. So what am I paying? 13, 15, all of a sudden. So what I have a problem with the Keynesian philosophy is that it works if business doesn't work. But what we're talking about is basically a quick pent up demand that if that hits, there'll be a huge need for capital that the market won't be able to provide, and it will just cut off the business at the knees.
Well, you see, the internet has now provided a solution to that. You just sell tokens.
That's right.
Okay.
Bitcoins.
But
the world's largest Ponzi scheme, by the way.
Right. But the new gimmick now are the tokens, where you sell the tokens online that represent some type of ownership of a unique asset. You could sell tokens to represent maybe the asset of one of your receivables. Can't you see the possibilities here?
Yeah, I can see the possibility. and I can see I can see the possibility that Wall Street can make that happen.
Yes.
I don't see Main Street making much of that happen. I will tell you this.
We'll use a SPAC, a hollow corporation that.
That's right.
Okay.
And those are, of course, they call those are referred to as blank check corporations.
Blank check corporations.
And what Merle's referring to is that this was passed about 3 or 4 years ago, maybe 5 years ago, which allows a company, a corporation, to do what's called a shelf registration. In other words, they register themselves as an SEC company so that they're traded on the open market. Then they go out and find businesses that want to go public. And they basically, that's why it's called blank checks. They write them a check to buy their assets. So they become part of this entity, which is already traded on is already ready to be traded on the Securities and Exchange Commission, and they go public without the costs, and almost instantaneously their value increases because their liquidity increases. One of the things that affects value of a business, a lot of people don't realize it, is your ability to get liquidity out of that business. So if I'm a small business like myself, and I don't want to, I want to reduce my size or get out of my business, I have to sell my whole business, and I have to sell it out completely. And then and it takes a while to find somebody to do that. And I probably do it. But if I'm a publicly traded company, I can sell new stock. Right. I can sell my stock. And so as a result of that, a business that's publicly traded versus a business that's non-publicly traded, the publicly traded company is going to be worth more because it can generate liquidity quicker than the business that doesn't. And so, it is. But you mentioned these tokens and other things. And actually,
I'm being a little facetious.
I know you were. That's what I like about you. You're very facetious, and I like that too. So, and I was being the same when I mentioned this, the world's largest
we
Ponzi
could form.
scheme.
Why don't you and I form a blank check corporation, and they will have that company buy your CPA practice and my economic consulting practice. and we can
We go public.
We
It'd
can
be
go
good.
public.
We just buy a bunch of CPA firms
And-
and economists, and we'll.
And it doesn't matter if we don't make any money,
No.
because most of the new IPOs on Wall Street don't make any money anyway.
And you don't have to. You just all you're doing is selling potential. It's it's funny. It's
I think we've just hit on our retirement program.
I think so too. I do think that it's illegal in at least 48 states because we
Let's
may
find
be.
the two where it's not.
That's right. That's right. Because Vegas is probably one. We'll just
I
call
like
it-
Vegas. It's
Yeah,
fun.
it
Yeah.
is. We'll
Great
Nevada.
shows.
We'll
Right.
be out in Nevada. Here's a question I got for you though, and along the same line, historically, socialist countries and communist countries do a couple things. That first of all, they spend government money to provide all of the benefits and the support and all of that, which is not really government money. It's the people's money. And eventually they run out. So then they borrow from someone other than somebody in their own country. They borrow internationally and they do.
On this, forgive me for interrupting you. I recall the comment by Margaret Thatcher that socialism is great until you run out of other people's money.
Yes, that's right. That's right. And that's really the concept. And I'll tell you just as a political comment, the problem I have with socialist systems and is that they claim to care about the person, that they're doing this because they care about everyone having having an equal benefit and everything. And in reality, when they don't look at what resources are actually available, they are hurting those people who need the money most, because there's limited resources to be allocated. And when you allocate resources to people who don't need the money, you're taking it away from people who do. And so this, I'll leave, just in a general, this is a thought I'll leave you with as a listener. When you hear somebody say, well, you're a conservative, you're heartless, I'm a socialist, I'm compassionate. Think of that theory. When you give compassion to those people who don't need it, you take it away from those who do. And that's not very compassionate. And so anyway, I just mentioned that. But one of the things that governments do is socialist governments do is they typically have to borrow a lot of money because they can't generate that kind. They're spending prior to supposedly the income that they're going to get. So they're borrowing a lot of money. They end up with a lot of debt. And then typically the process is to inflate your way out of the debt, because you then pay the debt off with cheaper dollars or cheaper currency. So, you've basically devalue your currency and then pay, in effect, by paying your debt off with inflation. So now $1 million is being paid back with the equivalent of $500,000 or $250,000 or whatever, just because, you've got 4 or 5 times the inflation.
Right.
And then usually what those countries do after that is they devalue their currency, or they do a split currency. Like, for example, Cuba and some of the other places, they have a national kruk, which is the same value as the US dollar, actually a little more valuable than the US dollar. But then inside the country, they have their domestic kruk, which you can't buy if you're a foreigner. And it's 5 times the
I ran into that. My wife and I we went to Cuba. I guess maybe 2 years ago. And when you get off the cruise ship, you had to buy the currency that they sell to the tourists that we could use to spend.
Right.
But there was another currency altogether that the natives used.
They use.
And there's a prohibition against mixing these two.
Right. You cannot.
Okay. Yeah. And I remember we were in one little shop, and this little elderly Cuban lady came up to us, and she was all upset because somehow, some way, she had a real US dollar bill, like a $10 bill that she wasn't supposed to have. And, she was trying to get us, and we did. I was glad to take it and give her some of her own, money back, which, I mean, the tourist money, they can accept the tourist money, but they're not supposed to be having real US dollars.
No.
But, another point that you didn't make, but in almost every socialist government that I have ever had any knowledge of, they always have a very heavy-handed government.
Oh yeah,
Okay, I mean there's no concept of government is best that governs least.
right.
In a socialist economy, the government is best that governs most.
Yeah, exactly.
And it's very oppressive when you see it. I mean, if you've ever been to any of these countries like that.
Yeah, and I had the chance to go to Cuba too, and I agree. But one of the questions I got for you is, one of the ways that countries get out of this is devaluing their currency.
Yes, right. Which Venezuela has done over and
over and over again. Yeah, I mean, it's if Brazil, Venezuela, those places, you when you get paid in the morning, you immediately go out and buy bread and buy food, because if you waited till the end of the day, you can't buy that same stuff anymore. You don't have enough money to buy it. That's how bad inflation is in some of those countries. But like I say, they deflate the currency. But how do you think that these cryptocurrencies, Bitcoin and others, how do you think cryptocurrencies are going to play into this? Is that going to, let's say the U.S. gets into that same situation. I see us doing that in the United States right now. I don't see a depression getting us out of this problem. I see, I see potentially the government, our current government, trying to inflate their way out of it. Now, eventually there'll be a depression because the economy can't handle those kind of things, and it'll collapse. The question is what they'll do when it collapses and who's in office. But I see the government trying to inflate us out of this. They'll try to inflate. Small companies will have a problem because we have a harder time passing on our costs or as higher prices. The Wall Street companies have more of an opportunity to do that because they don't have as much competition, and so they tend to. It's the thing I find ironic about the Dow, which is supposed to be our bellwether indication of our economy, and it consists of 30 companies who are largely monopolies. I mean,
right.
So it doesn't represent capitalism at all,
Right.
But so how do you think, or do you think that our inability to control our currency, if cryptocurrency becomes popular, particularly the Bitcoin, what do you think that will do, to some of this, Keynesian philosophy and some of this, grow or deflate our way out of it or inflate our way out of it?
It's a very good question, and I don't know that I have a definitive answer for that, because in the economic textbooks that have been written to date, we've pretty well confined ourselves to some type of an economy with a single currency in them.
Right.
You're now talking about an economy with multiple currencies. It remains to be seen just how widespread cryptocurrency can become, because if you want to buy one Bitcoin, you're talking about what, $50,000-$60,000. Well, Joe Lunchbucket's not going to be buying a Bitcoin. You're going to have to figure out a way to break that down into into the equivalent of pennies, for it to become a viable means of exchange. Now, there are some events that come along, like Musk saying that, well, you can use cryptocurrency to buy a Tesla. Well, again, how many people are buying Teslas and using Bitcoins? But it's a chapter. It's a book whose last chapter has yet to be written.
Yeah, I think that's. I think you should write that. I think you should write that chapter.
I can write the first chapter. I'm not.
Yeah, I think you should write. But I do think, and I think we're getting closer to. I think we're getting closer to the finale of that. I think that, I'm not sure that there has ever been I don't think there's ever been an economy as large as the U.S.'s that has actually faced this situation, this potential transition between a capitalistic system and a socialistic system, and the economic principles underlying whether that will be successful or not. We've had, like you said, bits of it, and we saw results, but the results are always a little bit farther away, and people don't put the thing together. But your point exactly. The Jimmy Carter his administration
was the recipient of the Lyndon Johnson Society.
It was absolutely. Yeah. Just like Bill Clinton was the recipient of the Ronald Reagan era. The fact that the economy the supply side economics had produced, a significant amount of value. he was then able to spend it.
This may surprise you, but Bill Clinton is one of my favorite presidents. He balanced the budget.
That's true.
It's the last one.
That's true.
Okay.
That's true. He got lucky. It helps if you follow the right person.
Yeah.
But
Right.
yeah, I mean, people don't, they forget at the time that Reagan was hated in the first. I mean,
Right.
they were talking about impeaching him in the first
Yes,
2
yeah.
years of his administration because of the fact that he was trying to deal with the Carter issues
Right.
and cutting that off. That was in effect a forced recession is really what happened. And that's why I say right now, I'm
Volcker
not,
was responsible for a lot of this too. He was chairman of the Federal.
Yeah, he was pumping money out.
and he didn't have any qualms about seeing interest rates go double digits.
no, not at all. And I will tell you that, economic cycles used to last for 4 years, 5 years, and then they were 3 years. And now economic cycles, I remember for a while they were 18 months. Now they're less than 18 months. An economic cycle is less than 18 months. It's almost a new economic cycle, and what I'm talking about is, where you go from, from a recession to lower interest rates to higher interest rates to, the whole process, inflation, recession, the whole cycle. They used to be long-term. Now they're very short-term. So I'm worried about what's going to happen with that. I really am. I think that we're looking at, and I do think that we're looking at Jimmy Carter era inflation at some point. How fast that's going to be, I think it's pretty soon. I don't know about you.
Time will tell.
Time will tell. I did want to, we're running out of time here for ourselves, a couple minutes. Merle, I did want to thank you. And of course, every Wednesday, you're always welcome. I love to have you come in. And
This is fun.
You have a degree and a PhD, and you actually know something about about economics. I just pretend I do, but it's
You're a good pretender.
I know.
Yeah.
I make stuff up as we go, but it's
You engage in creative accounting too?
Yeah, I can do that
okay.
really well. I'm as they say, you ask your CPA what's 1 plus 1.
What do you want it to be?
And what do you want? Yeah, the answer better not be 2, because that's not a good CPA. The answer needs to be, what do you want it to be? But anyway, so but yeah, I really do appreciate your history and giving us some background on what's going on with this, and and I do appreciate that knowledge, and you sharing it with our audience, and love to have you come on a regular
been fun to
basis.
be here.
Yeah.
Good to see
Anytime
you.
you're in town and not vacation, and you can
Okay.
you can come on. We thank you for joining us. We appreciate you coming in with us and here on and talking about some things, and having an opportunity to just air some issues out and talk about some things. We'll talk more next week about some of the other issues out there, maybe what's going on internationally and the economy there, and what's happening in Stewart here too, and some of the factors here, particularly housing, which is an interesting subject locally here, and subsidized housing or workforce housing. We'll talk about that a little bit maybe next week too. So thanks for joining us here on Treasure Coast Solutions. We're here every Wednesday from about 9 or whenever I get in to about 10 or whenever I decide to stop talking. And that's it right here on WSTU Digital 1450. We're Martin County's Heritage Station.